Tefera, it's an honor to have you today with us. This is an investment matter program. Normally, we are having this program every week, and the main objective of this program is to exchange ideas on the most critical factors that the Ethiopian market currently is looking for, which is an investment. So we call it investment matters. So to start things off, could you please introduce yourself to the listener and tell us about your professional journey and what led you to develop this commission agent banking system, banking model? Thank you.
Thank you very much, Makub. I thank you very much for having me on this show. My name is, as you said, Dr. Ameha Tefera. I'm living and working in Ethiopia. I'm a banker, long-term. I have a long experience in banking area. I have experience. I have a talent in mathematics. I developed mathematical formula. I have my own series. When I was 15 years old, I developed so many mathematical formula, and also in business, I developed and solved an even cash flow formula. The biggest one is my invention in PhD, my PhD paper titled "An Interest Rate Commission Agents Banking System." I tested that in that environment. The variable, the investor, whether the investor have a positive impact on the business, whether the commission agent have a positive impact on the business, whether the borrower have the positive impact on the business. So the correlation between this on and the stable deposit related to the stable deposit also, whether have a positive relation or not, have been tested. So it has confirmed, it has published in many well-known journals.
I truly inspired by your story. In addition to that, what I would like to say is, the discounting models you have been explaining in terms of the cash flow. So we have this present value and we have this future value. And the assumption is there is an assumption behind the calculation. And you are interrogating those formulas to come up a more practical solution to the business. That's also, it's fascinating to hear. So, congratulations on those, but let's focus on today's terms. Before I go into the product detail, as always, it's really important to start from the microeconomic dynamics. And as you know, Ethiopia is navigating complex economic challenge. There is huge opportunities because the market is just opening up. At the same time, there is huge economic challenge because of inequality, because of high inflation, because of the currency volatility, and the big one is the limited credit available to the majority of the Ethiopian population. So from your perspective, because you are now in this, I would like your perspective in terms of the trend impacting the banking sector. What have you seen? Just in a nutshell. Thank you.
I thank you very much. This is a great and demanding question. Last year, I think I wrote one article on Reporter whether monetary policy, always does have an effect or work on infant financial environment, especially in the developing country. I support in every literature also this idea have been confirmed. It doesn't work all the time. So what we have done in our trend, we limited we capped the credit by limiting the disbursements. We devaluated the cash without any subjective or propounding solution. For example, if there is no any production, if there is no any limitation on imports, there is limited export. When you act on monetary policy, every element can have an effect. It can bring, as you have seen, the economy have been affected by inflation. So this trend may benefit some exporters, limited exporters, but it can affect the majority of people. For example, in low-level economic environment, people who are in that economic environment have been and are affected by inflation. So the main problem of this is the one is the monetary policy. When you are going to implement monetary policy, we have to we have to consider some assumption and logical truth and the fact that we have, for example, if there is no any production, we cannot do anything further, devaluation or something like any economic prosperity. So the other is, the banking system by itself is, a bottleneck for the economy, because the traditional bank or conventional bank, Islamic bank, gather a lot of money from the people in trillions, but what they have lent previously is up to 400,000 people, 400,000 borrowers. This is illogical for investment, for to have any revolutionarized growth. This is a very limited. So the banking system by itself is a bottleneck, because they gather a lot of money from the society, and the land and the investment is limited. Their contribution to the economy is very limited. So because of this, wherever the population increase, the demand of the people increase, and whereas the banking investment is limited, there is a gap. The demand and supply is a huge gap. So what this have been created, big inflation, long-term inflation. So so the problem behind this limited lending and inflation whatsoever in the economy is the one is monetary policy that we are acting on, because without any precondition, what we are going to act, any principle, will have an impact on the majority of the salary.
I think looking from the distance, I can say, the efforts by the government to make, the economy working for everyone is having a challenging time at the moment, because the challenging time, as you said, is there is a policy intention to make a positive impact, but because we have structural issues, we have significant populations rely on the government handouts, and also below the minimum threshold, it will definitely take time, and then it will, unless it's managed properly, it's going to chaos, will have a huge impact in the country. So I concur with your argument that that this economic imbalances needs to be addressed. Whenever government take action, it should consider the very vulnerable section of the societies to make sure that our destination is not impacted. The idea is good. The execution, you have to take many variables into account. Okay, so you have mentioned about credit cap. So the credit cap, because it's just around in a second, but it looks like you come up with a very good product, which is the commission agent banking system. So and you said, I've read some of your articles, and you said that will definitely address so many of our issues. So first, I would like to know what this product is all about, and how you invented this product, and also explain to us, the parties involved, like you said, the investors, the investors, the one that lends the money, the borrowers, the agent, which is the bank, and so can you explain more? What is it really this product is going to address our current issues?
Thank you very much. This product have been based on my PhD paper. As I've said, I already mentioned that the title was an international commission agent banking system. It has well recognition all around it. Many web page, many wiki, many area universities have been published it in the Wikipedia, in the Wiki One, in Handbook, in so many big knowledge resources have been published. So it has very well recognition all over the world. So I tested that after there on that dissertation, the variable, the investor, the borrower, and the commission agent, and whether it can bring stable deposits to the bank, it can medicate traditional Islamic bank. This all have been tested and have good result, positive result. So the commission agent banking system means having the agency of the investor, the fund holder, and dispersing the money to the borrower. Then up to settlement of the loan, the commission agent bank will have administered the loan up to settlement. This can be one-to-one, the relation, one fund holder to fund borrower, money to one borrower, one to money. So the dimension, the relation between this borrower and lender and borrower are multi. So, as much as the transaction, loan transaction increase, the purpose of this innovative product is, fund holder should have use or have a benefit on their fund. For example, a depositor may have an opportunity, but if there so far there is no any solution, alternate solution to have had some income on their deposit. They get minimum 7%, whereas the bank take 22 around that percent. So this NIM is very huge. So it discourages the money holder, but it encourages the banks. So in order to redress this invention have been created. So as much as the investment, as much as the credit transaction increases, the investment will have high growth too much. So the product in between that will be produced in this transaction by borrower will add on the economy. So the production will increase, the demand and the supply will be matched. So inflation and unemployment, because much of investment will have job opportunity, unemployment will be reduced. The other is inflation. As much as we produce, as to the level of consumption, inflation will be managed properly. The other is, there is many economic the balance of payment deficit, because whenever the investment increase, the production increase, then we cannot export. Then the balance of payment deficit also minimized. So many solutions up on this.
Excellent, Amma. So I'm going to break it down. As I'm an accountant, I would like to know the detail. Okay, so we have a saver. Normally, in a normal traditional bank, there is a saver who puts money into the bank. So the accounting, the logical transaction is the ownership of that money has been transferred from, instead of ownership, it's like the risk has been transferred from the saver into the bank. Yeah, so the bank is a financial institution, is responsible for managing that fund in accordance with the policy and the procedure set out by the National Bank, right? So from a saver point of view, now we call it an investor, they will get more cash, they will get more interest. But then the other side of the equation is currently they are guaranteed, as long as the bank is not liquidated, they are guaranteed a stable amount of interest, right? But in the case of now changing from a saver to an investor, will this saver is going to take extra responsibilities? Is there additional risk that the saver is going to take? That's number one. Number two, so the bank will take all the money, then they will have a credit department, credit portfolios. They have used different means. They have also used securities for collaterals, and then they disperse the money to the lend to whoever, to any business organizations that are seeking for the loan against the collateral. So from the borrower point of view, in either way, either through the bank or through your CAPS model, they will get the money. So that's it. They will pay interest, they will get the money. So I would like to know, in terms of what is really the benefit for the investor, which is the saver, what is the benefit for the bank? Definitely the bank will have a huge benefit. And I would like you to consider the ownership, who is going to own the asset, whose money is it by the end of the day, and then what additional benefit this can bring for the borrower.
Thank you very much. I was thinking to come to your breakdown. I was simply define the title, but what you say, commission. When you say commission, I said interest rate. It's a familiar interest rate because it can be determined by demand and supply in the cash. It is now. I said that. The other is profit rate. I said profit rate, which means for Islamic bank, they
Yes.
use a principle. So
Yes.
they, according to their principle, the individual should pay the repayment after the profit and loss. If there is a loss and if
Yes.
there is profit, that can be shared by the bank and the individual. What I have redress in this area is, whenever I give you money, whenever I lend you something, that is not your income. You return me later after the
Yes.
work on. So
Yes.
the meeting point is they consider, still now they have been considered as an income and taxed. So I waive the tax. The repayment should have to calculate before tax on the profit before tax. So the individual will have pay the repayment before tax and as expense parallel to the bank, so that in this way the profit and loss will have something after tax. After
Yeah.
tax, the profit may be loss or uh, gain. We don't mind that parallel, but as an expense should to consider, and the borrower should to pay parallel to the bank. So in that way, I said the profit rate for Islamic bank. The other is loan cost rate. I said loan cost rate according to the administrative cost of the financial and non-financial administrative cost of the agent bank relate to the volume of loan. Whenever the volume of loan increase, the administration cost of the agent bank will have increased. So that relative to that, the minimum rate should be set, and I said that rate. The other is, the trade price rate. Trade price rate, I said for the one payment. For example, if individual purchase from factory something, he borrow and he pull out the goods and goods something from the factory that we value for the economy. So whenever he sell, it's a one time, so the payment will be effected. So the rate will be calculated on that issue. So the commission, what I've said in my model is the rate that we apply, the agent part will apply on that interest rate, profit rate, on loan cost rate, or trade price rate. For example, if the market rate is 20%, if the bank considers that the financial and non-financial aspects of the bank expense. In addition to that, having had some profit margin, if he considers 30% is enough for that agent bank, 20% of 30% is 6%.
Yeah.
So now the rate of the 20% that would have been delivered to the investor will be excised 6%. So the remaining about, the 40% would be forwarded to the investor, the bondholder, the administrator, the agent bank will have 6%. So having this profit, the agent bank, transfer the credit risk and the liquidity risk to the investor and the borrower. When we say transfer, is not simply transfer and say with no activity. It should not be silent after transferring the risk credit and the liquidity risk to borrower and investor. So the agent bank should in return should manage stiffly manage administer the risk that have been flow to the investor and the borrower. This can be, by having substitution. There is an incubation. Entrepreneur will be incubated with the deposit. Borrower will be incubated with the deposit. Investor will be incubated. Whenever the borrower seem to be failing according to his cash inflow, whenever the cash inflow of the borrower seems to be decreasing, there is a signal of being a default. So immediately the original borrower will be replaced by the incubator, among the incubator capable entrepreneur having full fledged of the borrower property. For example, if the individual borrow having for hotel management, the owner of hotel may be a borrower. So if this hotel cash flow seems to decreasing, immediately the agent bank will assess and the risk the signal so that the entrepreneur among the equated will be replaced having their fund. So the original borrower will be left out for the moment. Then the entrepreneur will have managed the property, I mean the hotel properly, so that the repayment will be continue up to settlement. In that repayment, the individual will have an income, a profit, and consider that profit maybe for future investment growth, maybe for horizontal or spatial, horizontal or vertical specialization in other business will have much impact for the individual and substituting entrepreneur than the borrower. In the last, when the loan settlement, I mean the loan will have been settled, the original property of the original the borrower will be returned to the original borrower. This, this method is unique and have not been trained in the world. So it can stimulate, in return the individual who have been failed lastly, then can regress and have a contribution in the economy. The other is, the loan cost, I mean, loan default insurance. I said that default insurance, whenever the individual would have not collateral, movable and fixed collateral, he can buy loan default insurance. The other is, there is an investor substitution. Whenever the individual investor want to withdraw the system, the credit, so from the incubated investor will be substituted. For example, the individual.
The rationales of the in terms of practicality. So you have been explaining that in case one investor is unable to proceed, then they can be replaced by another investor. If a borrower is unable to proceed, it can be replaced by another borrower. So still, what I would like to know, Ameha, is at what point the money exchange is happening. So is the saver, which we call it now investor, is it obliged to put that money into the bank, or the saver will come or will give the money to the point the agent has already done an assessment on the borrower? Because currently the saver will come to the bank and deposit the cash, and then the bank will take some time. That is one of the mismatch. There is the time where the saver is putting the money, where is the time where that money is given to borrowers. So my question is, in this model, at what time the money exchange happens?
Okay, thank you very much. I was thinking to come the main issue. There is a three strategy. For example, if the investor, there is a three strategy. So the one is a revolving lending strategy. In this strategy, the individual may have a contract with the agent bank to revolve the repayment, the principal repayment along with the credit price, to continuously on the different projects having different benefits. In this case, the individual seniority will have increased, so the individual will have opportunity to have much profit on this on his fund. Whenever the individual want to withdraw, among the incubated individual may be replaced. Whenever the borrower seems to be failed, the borrower, as I've told you, will be substituted by incubated entrepreneur. The individual investor may bring the borrower from the market, whether he knows that if the individual investor bring to the agent bank the individual borrower who has previous affiliation, so the collateral may be waived there. If the investor approach to the commission agent bank to look for right project among the portfolio, the commission agent will have assess and select the right project for the investor. So in this case, the agent bank will have charge the investor one-time fee for assessment, so that the individual investor or the investor may bring affiliated borrower, affiliated with him borrower, or can lend to the borrower already in pipeline of the commission agent bank agent, the agent bank. The other is, the non-revolving lending strategy. In this case, the individual may lend one time, then after the loan settlement will withdraw the loan transaction. So in this case, the individual investor may lose the seniority. According to the first non-revolving lending strategy, the benefit of this non-revolving lending in this non-revolving lending strategy, the investor will have not opportunity to have much profit according like senior investor that I've already mentioned in the first lending strategy. The other is depository lending lending strategy. Individual may have a deposit account in a bank, so this model can be annexed as one unit of the bank. Maybe it can be independently, can work in full-fledged environment. So when the individual want to move to investor position from the depositor position, then the individual depositor may consult the bank. Then the bank will transfer, immediately sees the interest rate on deposit account, then transfer to the commission agent bank to buy loan share of. Select, the depositor may select priorly the the project that he will going to invest. So the money, for example, the individual depositor may have 20,000 per, may want to have the opportunity to invest on one project of the bank, which has already got the fund from the bank. When you see deposit, every the loan, the deposit account that the bank calling to the public is not a liquid cash already lent out to the borrower. So rather than the individual withdraw and shift to other bank, the individual depositor may allow by this time to buy loan share of that project that have been lent by the bank previously. So the individual will have a credit price instead of deposit interest rate. Then the bank will have through commission agent bank a commission on that interest rate. So the bank will shift partially the credit and liquidity risk to the individual. So in such a way, the lending activity will have much seamless environment, so that the bank shift any credit and liquidity risk to individual investor and borrower, having sole interest rate commission without having credit and liquidity risk.
So from our discussion so far, my understanding is you are taking some power from the banks through this product. I know in terms of monetary, they might get the same amount of commission, given if we consider the default, if we consider the number of staff they need to hire, if we consider the total cost of fundraising and the total cost of investing and getting return out of it, I can see that there is a power that you are somehow thinking of taking from, the bank's role will be diminished. What you said is you are bringing more, transactions and more revenue to the banks rather than taking away. I know currently the ways of working, the way they deal, the cost of operating in Ethiopia in terms of banking is, their cost to income ratio, most of the banks over 75%, because they have to, employ lots of employees to drive the saving, and at the same time, lots of employees for, granting the loan follow-up, all of those stuff. So hopefully this will address their current problems. But in terms of, so what is the reaction so far? I'm sure you have been approaching different banks. You try to, so how is the market taking on this product?
Okay, PPP, public-private partnership.
Yes.
It's already implemented in Ethiopia. So the government is using to refill its budget deficit. Especially in corridor development, it is using to refill that.
Can you explain more on that, please? Sorry.
public-private.
No, I
partnership.
know public-private partnership, but you said for example, in the corridor development, the government is currently using it. So can you please explain how they are using it?
They gather a number of people who have a capacity to invest. For example, it may be parking, it may be car parking or a recreation place, whatsoever. They gather a number of investors who have capacity to invest. Then they invest their money. That product have not, the method of profit sharing was inventive step. It seems to me, it intend to seems to my product. So there is a trend, a trend of adapting my model. For example, if you consider also the Renaissance Dam, government have been issued a lot of bond for the public. It gather a lot of money for the dam. Then the government is the borrower, the people was the lender, the lawyer was development bank. So my trend also in my model is this is many to one corresponding. One of the line, many to one. The lawyer, the commission agent can be the development worker. The trend have been, custom in Ethiopia. So this is very seamless, and many banks I'm lobbying. I've got a patent on this in Ethiopia. So having that patent means the government of Ethiopia already allowed to work in this system by users. So this permission can be given according to the law and rules and the regulation of the country. So it have been permitted. Then I'm currently lobbying the banks. They accepted. They, lobbying means I go to different bank and present, and they understood. They become happy because so many problems have been redressed, because it doesn't need any capital requirement. It doesn't need any reserve in national bank regulation. Even the margin that the government is thinking about it will be eliminated, because this model can independently, in multi way, can be done by the bank as well as fintech. Any financial microfinance can do. So it has many advantages. So it has been welcomed by financial institutions.
No, that's really great to hear. And to be honest, I'm really impressed by the way the product has been designed, the way you explain it. It really makes sense. So I wish the adoption rate is increasing, and I'm hoping that a pioneer bank will come out and say that we are starting this product. So that's my wish. So I'm hoping for that. In terms of the final comment, we are reaching to our final session. So what do you think is going to happen the next in the coming months? What do you hope overall with regard to this product?
I already have a book. I wrote up a book on this model. So I hope in the near time, the banks, I deal with the National Bank of Ethiopia. They allow me to proceed in my product to lobby banks whenever the individual bank or a group of financial organ want to implement. They say me, they can communicate them. So in the near future, maybe everything will have reshaped, in financial aspect. I think every financial environment, for example, the many microfinance are in panic. They borrow from other organ, and they lend. This mechanism is not feasible. So many problems. If I was talking about the model with the financial microfinance organ, they are welcoming my model. So they promise to implement my model. So every financial organ in Ethiopia, as well as they have been allowed by WIPO to implement more than 200 countries. One of the countries is the UK. US also undergoing to that environment. So I think in the it kind of impact, redressing Basel 1, Basel 2, Basel 3 problems. These problems have been created by, to safeguard the depositors, so in my model, it can benefit landholder. The main issue, the main purpose of this, the Basel or the central bank work is about to have a safeguard of the individual depository and money holder. So that will be answered by my model. So it has multi-solution. It can cover all over the world in financial aspect. It can replace, it can mitigate the problem related to the financial aspect in conventional Islamic microfinance. So it can have a potential to change financial environment of the world.
Yeah, so thank you so much for coming today and for giving us this wonderful session. So, I would like to say, all the best.
Yeah, thank you very much. Thank you very much.